Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar whipsaws on Wednesday, forming a Gravestone Doji near the 4-month high, and from there a classic sign of potential exhaustion in the recent rally. The pattern emerged as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded and geopolitical sentiment shifted. On Tuesday, President Trump lifted market spirits by suggesting tariffs on Chinese goods would be substantially lower than the current 145%. He also reiterated calls for immediate rate cut, despite labelling Fed Chair Powell a major loser, while clarifying he has no intentions of removing him. The dollar index, when it rebounded off the 3-year lows around 97.70, now sits steadily at 99.40. Given from this candle, we could see a little bit more to the weaker side, and therefore the Australian dollar leans to a slight bearish bias, with the Gravestone Doji, a pattern that signals weakening bullish momentum after failing buyers or demand from that topside region of 64 cents, and therefore looks towards a region of 63.35 or base and near the 60-day simple moving average, which is around 62.7075. The euro dollar was also mixed on Wednesday as it rejects the top side of 115 and follows on with a little bit more to a weaker play. Given how the technicals look, I still feel there might be a little bit biased now to a bearish case and looking down towards the region of 112.65. But I'm not going to get too bearish. The reason behind that is that this trend that holds closer towards the lows of 111.50 is that we could eventually see the market reverse and aggressively rally, and that is on towards 118 as a potential target. But let's wait for this pullback first and let the technicals correct themselves before the bullish call, as a weaker play does appear to be unfolding. Turning to dollar yen, since posting a bullish engulfing signal at the key level of 140, the market has now posted another bullish candle, which is a dragonfly doji, and from there could give further encouragement to the momentum and look on towards the region of 143.85 to 144.5. But I feel this could give opportunity and therefore look for a reversal from this region and eventually take out the downside. Now, if we do see a close under 140, turning to the monthlies, little to our imagination is seen until around 127 to 131. A big drop, but then looking at this pattern is vulnerable to, in terms of triggering stop losses, I estimate there will be quite a bit underneath 140. Sterling, well, I don't really have a strong view and still holding to a neutral bias. The technicals are mixed, so there's no real call at present. Moving on to gold, well, the market was on somewhat of a free fall and still lacks momentum, even though they're a little bit mixed with the RSI. We could see a further decline down towards the region of 3,330, but there may be a bias coming back into a recovery, as an opportunity may see as a bargain hunters rally on demand and then back towards the top side around 3,500 in the broader sense. Having shown strong demand, we've got an engulfing candle and still a little bit of concern in terms of how this pattern is unfolding for oil. Nevertheless, with the support seen around 60 to 70, I feel the market may actually stage a further upside move eventually and clear the levels on towards $66 a barrel. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the day and to the long weekend.